Welcome to ISE's ETF and Index Weekly Outlook, a weekly outlook on ETFs and ISE's indexes, hosted by Patrick Ceresna, the Chief Derivative Market Strategist at OptionSource.net. ISE has a portfolio of more than 20 proprietary indexes based on a diverse range of fast-growing industries and emerging markets. Our team of indexing experts is dedicated to creating these innovative indexes and partnering with issuers to launch unique investment vehicles. This includes exchange-traded funds, exchange-traded notes, and other structured products. ISE continually enhances its trading platform and develops new index products to provide investors with the best marketplace and investment tools to trade smarter.
Hello and welcome to the ISE ETF and Index Outlook for February 13th, 2012. This is Patrick Ceresna. As always, we start off with a chart of the S&P 500 using that SPDR exchange traded fund symbol SPY, and we've now reached the overhead targets that we've set for the first push higher around this 135 to 137 level. We had a doji candle and now a reversal candle that brought in some selling on Friday. This may indicate the beginning of a little bit of a market pullback, but it also may be a false start. So we're not necessarily cheerleading the idea that immediately we have to begin selling on Monday, but nonetheless we are well overdue for one of these corrective patterns. And whether it first means that we spend another 3, 4, 5 days retesting up in the 135, 137 zone before the correction begins is wouldn't be out of character. But nonetheless, once one of these little corrective patterns does begin, the average duration can be anywhere from 5 to 10 days, and there are some situations where it could be even up to 20 trading days where one of these corrections would last. And in most cases, it would last about 40 to 60 S&P points, which would be about $4 to $6 on the SPDR. And so we could very easily off this 135 level be seeing that 129, 130 level on the very deep end, and on the shallow end we could just be testing the 131, 132 area during one of these quick little corrections before that market finds some sort of a bottom and moves higher. I believe at this juncture that in order for there to be a full and legitimate market decline, it would have to be catalyst driven, something far beyond the Greece debt problems or something like that, in order to really get a very new robust sell cycle underway. More than likely the market is going to hover toward highs and then find some sort of a topping formation that could take many months. We probably will be seeing this uptrend continue right out into April and May. Next year, we're going to take a look at the ISE Natural Gas Index, which is symbol FUM. There are ETF products that you could trade on this under the symbols listed on the page here. What we're seeing here on the Natural Gas Index is continued consolidation. We haven't seen a technical breakdown yet below that 105, 108 level on the downside, but there's very little reason to be bullish for this. Now, the longer they hold that support line, we can't rule out the possibility that it behaves in a far more range-bound fashion and therefore trades back up to the 120 to 123 level. But considering that the broader market is overbought and prepared for a sell cycle, it's likely that the natural gas index will be weak with the broader market during a short-term pullback. But if we have any break below 105, it could really begin some short-term selling that we could see even that 87 to 90 level on the downside. Not necessarily our forecast, but anything below 105 could certainly begin a short-term wave of selling. Next year, I want to take a look at the ISE Global Engineering and Construction Index, which is symbol CVL, and more or less we've now also reached some of our first upside targets, and you can see the red reversal candle that came in off of that. But just like the broader markets, we believe that this Construction and Engineering Index will probably just have a very natural pullback. A very deeper version could make it all the way down to the 230, 235, but it doesn't necessarily have to go that deep. Nonetheless, after even if this was the beginning of the sell cycle here, it could probably last anywhere from 5 to 10 days, and then it'll be a buying opportunity for a push maybe back to the highs of 2011, which lie in the 270, 280 range up above. Next here, I want to take a look at the ISE Chi-India Index, which is the symbol ICK. We've now reached our first upside target zone, which is that 53 to 55 level up above. We're seeing some sideways consolidation candles coming out here throughout the week. Really at this stage, just like the broader markets, there probably is room for a little bit of a pullback at some stage, but it probably will again emerge as a buying opportunity, as it is probably clear now that we've got a double bottom in around that 42-44 zone down below, and we just need a neckline break above the 53-55 to get this index going to the upside. But it probably will maybe even consolidate as deep as the 50, 51, 52 area during a little pullback before the next buying opportunity. Next here, we'll take a look at the ISE Water Index, which is symbol HHO, and more or less we've seen a push right up to the highs of around the 92-94 level up above. Again, we're seeing that strong reversal candle here, which may be an indication of a beginning of that same market correction that we've been talking about in so many of the other markets. But again, I don't believe it's very likely that the correction will go as deep as the 84-86 level. It could, but more than likely support levels around even the 88 level will probably start holding this index over the next 5 days, and that will probably emerge as the next buying opportunity. Next year, I want to take a look at the ISE Global Copper Index, which is the symbol ISC, and copper here has already started a little bit of a pullback. Again, we're anticipating the support levels to initially hold here on this pullback. Afterwards, it is likely that this copper index will not exceed the 440, 460 level in the bigger picture, but after its pullback, it may still be a buying opportunity for a trade from this 400 up to 440. So there might be some short-term opportunity to profit, but we're not going to be overly optimistic about the upside. Finally, I want to take a look at the ISE Cloud Computing ETF, which is the symbol SKYY, and more or less we've approached near the highs of July of last year, and have shown some signs of little reversals. More than likely, we could see again a little pullback back towards $19 on the downside. That will probably emerge as a buying opportunity in this cloud computing index, and probably we'll see it attempt to make some higher pushes afterwards. That was your ISE ETF and Index Outlook. Thank you for joining me.
Thank you for participating in this week's session. Please join us again next week. For more information about Patrick Ceresna and to sign up for free ETF and index trade alerts, visit www.optionsource.net. To learn more about ISE's indexes and ETFs, visit us at www.ise.com/ETF.